So welcome guys, and I want to talk about my trading strategy. Let me delete this. Okay. So I normally start from the daily time frame. I normally go to my daily time frame just to find the momentum, or rather the direction of the market. Okay. From the daily time frame, what I'm interested in is the direction of the market. Let me give an example. It's a good example. I normally trade chart pattern. If you are aware, guys, we have the flag. Let me give an example. Let me give an example here. They say the market was moving upward. Okay. And then come down, gets up. And then here, the market starts correcting. They say correcting in that sense, like that, like this, like this. Okay. It forms our flag. You know, flag is one of a continuation pattern. It forms this flag. Okay. So, and then we have this is our zone, our resistance level, now turning to support, like that. So the market was moving up, and then it came to retest this in this collective manner. It formed this flag. So what we do at the third touch of this trend, and you see this is the first touch here, the second one here, the third one here. Okay. Let me delete. Okay. So we either enter at the risk, this is the risk area. So we either get our entry at this level, the risk area, pips, we make sure no more than 30 pips around there, stop loss around there. And then our take profit is at the next resistance. So our take profit we normally take at the next resistance, or rather this one being the first take profit, but we normally take it at the next resistance. So, or we can enter our reduced risk area, which is like this. The market breaks this resistance. Okay. Like that, they say like that, comes back to the test and then goes up. So what we do, we enter at that level there, our stop loss at that level, and then our take profit is at the next resistance. Okay. Very simple, guys. Very simple. Let me delete this. Yeah, like that. So, yeah. Let me give you an example. You see like this one. The market was moving upward. Let me. The market was moving upward. Let's start from there. You see that? It came down, went up, came down, went up, made this flag, okay? And then it proceeded upward, okay? So after finding this direction, or rather the momentum or the direction, we drop to the 4-hour, to find our chart pattern. Our chart pattern, we normally find it from the 4-hour. Let me go back. Here we go. So you see, this is a perfect chart pattern. So you see the market was moving upward so nicely, and then it started correcting. And we can see our support very clear at this level. Okay. That's our support. You see, and to see the way it got some ways out here, it broke, went up, broke, went up, you see? This. So, guys, we said our first entry is at the third touch here. And if we did not get our entry at this point, we wait for the retest, okay? You can see this good retest. So we could have entered at that point so nicely, like that. Our stop loss below that, or they can be, but I like it below that. I'll take profit. First take profit, can take it here, which is a 5 point, around 4%. Or let me see whether there is a normal leg. Okay, no problem. Or if you want to find it correctly, we normally use this tool. From there, let me put it from there to there. Yeah, so you can take, if there's no resistance from this point, we can put our take profit at that point. Okay, so it is such symbol. Okay, guys, I think you have seen this. So the most important thing in this strategy is to know, to get where the direction is, the impulsive move, okay? The impulsive move. The market was moving up. It created this our flag, then continues. This is a continuation chart pattern, okay? Or the market, let's say, let's say the market was coming down, okay? It went up, okay? So it created this, our support there. So it came down again, but this time it came in a corrective manner like that, something like this, okay? Therefore, we anticipate for a breakup to the upward, okay? Like that. So we have those We have those continuation patterns, reversal patterns. Continuation is like flags. Reversals, we have the wedges. Okay. I think there's somewhere I had a good. So we are done with that. We are done with that. Let me see. I will find a good explanation again. Again, this one. You see, guys, look at this. Our market was moving up, okay? It started correcting here, went up, corrected, and again went up, okay? In this kind of a scenario, I said we normally draw our chart pattern from the 4-hour. You see the market moved upward, it broke this resistance, okay? It went up, it started correcting. So we draw our chart pattern like this one. And we normally draw from the week, okay? Not from the body. We draw a trend line from the week. So we can put it there, no problem. Like that, okay? So we wait for the break of this trend line, okay? And then, like for example, this one, it was moving up, corrected, broke, okay? In this kind of scenario, we wait for the retest, or we can either enter immediately after the closure of this candlestick. So let's say we enter there. Our stop loss can be below there. I said, I'll take profit. We look at the resistance, but this one I could not take. That's a 1.5%. So I could look for further. I say, if you cannot find your target, the most important thing, you take that too. Yeah, you take it there. I say to that point. Yeah, take it up, put it there. Okay. And then put your take profit at that point. That's a 4.2. So that's nice. Okay. That's nice. Let me see another one. Let's see. Let me go to DXY. DXY is very important because we normally use it to see that the strength of the dollar. It's the dollar index. Look at this, guys. Look at this one. This was a perfect one. You see, the market was impulsively moving downwards. This is an impulsive wave. Okay. This was our impulsive wave before we started this bigger correction. Okay. And then the next impulsive wave. Okay. So at the 4-hour, we see we have this wedge, a rising wedge. Therefore, we know for a rising wedge, the break is obviously to the downward. Okay. Therefore, I like trading these patterns. We call them pattern within patterns. You can see this one. It came down. This a rising wedge. Then it broke to the downward. Went up. We had this frag, small flag. It went up. Okay. These were nice trades. Okay. But within that one, we have this bigger wedge. Okay. Which shows that the market is going to break to the downward. Okay. So let me show you how we could have entered. Let me go to 1 hour. 1 hour, we normally use it for candlestick confirmation. Those engulfing, those rejections, okay? We normally use those ones to enter our trade. Let me give you a good example here. Let me start from this.